I'm Bridget Stomberg.
And I'm Lisa DeSimone.
And this is Taxes for the Masses.
Today's episode is on the no tax on tips provision of OB3.
OB3 introduced a new section of the Internal Revenue Code that provides a deduction for qualified tip income received by individuals working in jobs that customarily and regularly receive tips as part of their compensation. In today's episode, we discuss the mechanics of the qualified tip deduction and welcome Alexander Rafat to discuss IRS and Treasury guidance issued following the passage of the bill.
Hello, B.
Hello, Lisa.
Today we're talking again about taxing tips, or I guess not taxing tips.
That's correct. We're talking about not taxing tips.
Okay.
And our listeners may recall that this idea of not taxing tips arose in fall 2024 on the campaign trail. It was first proposed by Donald Trump. He floated the idea of not taxing tips. And shortly thereafter, Kamala Harris also seemed to think that that was maybe a good idea.
And I remember we did an episode at the time, just very loosely discussing this idea because, you know, we didn't really have a lot of details from then candidates on either side.
Nope.
And yeah, those details are kind of important. Like, what is a tip and what types of taxes are we talking about removing from those tips?
And although, you know, we have a tendency to be a little flippant on this podcast, those are actually very serious questions.
Seems kind of important.
It really is.
No tax on tips. Okay, what are tips and what taxes?
And what is a tax?
Yep.
I mean, yes. So yeah, we have to know what constitute a quote tip, or else everyone is going to be running around trying to characterize their compensation as a tip.
Yep.
So they can benefit, right? So we have to have some guardrails around what's a tip.
Yeah.
And when we think about types of taxes, we've talked about this a ton on this podcast. Federal income tax isn't the only tax that you're subject to. You have to think about state income taxes. You have to think about payroll taxes. You have to think about employment taxes. So all of these things matter. So if you're just running around saying no tax on tips, it sounds simple, but actually it's not.
Yeah, there's a lot more that we need to dig into here. Okay, so let's look at what was actually passed. So OB3, which was enacted in July of 2025, clarified that the no tax on tips provision means no federal income tax on tips.
And that is quite helpful, so thank you.
Yeah, it narrows it down. And in early fall of 2025, Treasury and the IRS issued guidance to more clearly address what a tip is, or more specifically, what qualified tips can escape tax, and again, federal income tax, under OB3.
So today we're going to talk a little bit about how OB3 changed the taxation of qualified tips. And we're going to welcome a guest to the pod to talk in more detail about who might actually qualify for this benefit.
Okay, so first things first, when people say no tax on tips, it's lies.
What's that? What?
They don't actually mean no tax on tips.
Oh, yeah. Okay. Very good point. I'm glad we're getting that out of the way early on.
Yes.
So it's kind of bad because last time I was on the IRS website, it actually said like no tax on tips, but it's just not true.
That. Yeah,
not
it's true. No.
No.
So what is true?
Okay, so let's be very specific. The provision we're talking about, new Code Section 224. I like it.
Okay, sure.
Lots of even numbers. It creates an income tax deduction not to exceed $25,000 annually. So it's allowing you to deduct at most $25,000 of tips. And what that means is that if an individual makes, let's say, $60,000 a year from tips, then they are actually going to have to pay some federal income tax on at least some portion of those tips.
Yes.
So it's a max deduction of $25,000 that is basically exempt from federal income tax via this new deduction. And that max is $25,000 regardless of your filing status. So if you're a single person, it's $25,000. If you're a couple filing jointly, it is combined $25,000. On top of that, the deduction, quote, phases out, which means it gets reduced as an individual's income reaches higher levels.
Yeah. So, and that's a really interesting nuance that I didn't catch when it was first passed and people were first talking about it, is that it's on a per return basis, not on a per worker basis. So if you have a married couple, they're both in the service industry, customarily receiving qualified tips that count for this deduction, they're only going to get like they don't get a 25 per person. It's a total of 25,000. Yeah.
Marriage penalty. Now we're getting a marriage
Yes.
penalty at the lower end of the income
Yes.
distribution. Thanks.
Yes.
Thanks for that.
And yeah, it's exactly right, because most tip jobs are at the lower end of the income distribution. So one important question is how much this is expected to benefit tipped workers. Are they even paying tax at all?
Correct.
So the Council of Economic Advisors released a report in June of 2025 that the no tax on tips provision of OB3 will increase average take-home pay for tipped workers by $1,300 per year.
So, I mean, it's not nothing. It's not blowing
No.
my socks off.
No, but it's not nothing. And
It's not
at the
nothing.
lower end of the income distribution, $1,300 that's a lot.
It's good. It's good.
Yeah.
So I'm going to be happy with that. Okay, so we've covered the fact that no tax on tips doesn't actually mean no tax on tips.
Yes.
Now let's dive into an intricacy of this whole thing that I know is near and dear to your heart this semester as you're teaching tax.
Oh dear. Okay, tell me.
So tell us, Lisa, Professor DeSimone, is this deduction an above the line deduction or a
Oh, dear.
below the line deduction, and why does it matter?
Well, as I've said in my class this semester about 60,000 different times, this is an above the line deduction, which means regardless of whether you claim the standard deduction or you itemize your deductions, you get to claim this deduction. In other words, it is not an itemized deduction where you have to aggregate it with a bunch of others in order to claim it. You get it regardless of how you treat these other below the line deductions, which for most taxpayers is the standard deduction.
Correct. So this is a good thing because, like you
Yeah.
just said, we know it's not one for one, but most of the people who are itemizing these days are higher income individuals. This provision is intended to benefit lower income individuals, so it's very important that it is an above the line deduction.
Yes.
All right, so now that we've gotten that out of the way, we know how much we can deduct. We've talked about the fact that we're only exempting federal income tax. So next question is, what do we mean by tips?
Yes. And this is fun because they have to be cash tips, but apparently cash doesn't have to be cash.
So, okay, wait, what?
I love this. I love this. It's hearkening back to the days of the Tax Cuts and Jobs Act, where foreign cash of U.S. multinationals was taxed differently than foreign non-cash, and we had to define cash. And there was a whole argument over whether Peruvian chickens counted as cash because they were easily exchanged and used by everybody in the economy. Yes. Yes.
And what was the verdict? Are Peruvian chickens cash or not cash?
I'm declining to comment.
Okay.
Bringing things back to this situation.
Well, no, 'cause I need to know in case I want to tip somebody in a Peruvian chicken.
Okay, I don't think anybody was actually suggesting that Peruvian chicken should be counted as cash. It was an interesting thought experiment.
Okay, I like it. I'm here for it.
But it begged the question of what is cash, because in this case, with the no tax on tips, which, as we've said, is really a different tax on tips, a deduction for some tips, it has to be paid in cash, but cash could be what I think of as cash, which is cold hard money, right? But it could also be a gift card. It could be payments made by credit card, right?
Venmo.
Which to me isn't cash. Yeah, PayPal, Venmo. And there are some other interesting examples like, chips at casinos, for
Yes.
example. Yeah. It cannot include things like, here are some tickets to a big event, or we'll cover your dinner or your lunch. It can't cover services like a massage or a haircut or something like that. Or digital assets, although crypto does count as cash. So explain that one to me.
So it's so many things, because you started this at one point by saying, what is cash, which I
Yes.
think is a question that every Gen Alpha person would ask. And you're right. When we were little, it was cash, check, or charge. Like
Yes.
a credit card and
Yes.
cash were two different things, but now
Yes.
they're the same.
Yes.
The other thing I think is interesting about that list you just read is it feels very like Vegas heavy. Like you could totally see a dealer getting like tickets to a show as
Yeah.
a tip, and this is saying that doesn't count. So I think the context here is very interesting.
Yeah.
Another key element is that the tip has to be voluntary. So the customer has to have a choice as to whether or not to give you a tip and what the amount is. So in general, mandatory service fees aren't going to count. So when you have that restaurant and it's a party of 6 or more and they add that 18% service charge, in general, that 18% isn't going to qualify. I think there's some weird exceptions where if you can omit it or you can override the amount, then it falls into that voluntary category. But the point is not everything counts. I know this one is a little under some criticism. I don't hate it because it actually mirrors the reporting under the FICA tip credit. And we'll talk about that a little bit later.
Okay. The last statutory requirement is that the tips have to be received by an individual in a, quote, occupation which customarily and regularly received tips on or before December 31, 2024, as provided by the secretary, end quote. B, what does that mean?
So this is pretty cool. And it means a couple things. It means that you have to be in a job where tips are a part of your compensation. And importantly, it had to be part of your compensation before this law was enacted. And this is something we talked about on our prior episode on the tips. And I actually think this is pretty smart.
Yeah.
This prevents you and me from going to the provost of the university and saying, hey, I want you to pay me half my salary in salary and then let my students tip me for how good each of my lectures are. You can't now change the structure of your occupation ex post to reclassify some of your income as tips. So this is basically a fancy legal way of saying you have to be in a job that historically had tips as a big part of the transaction.
Side note, I think that would be a terrible proposition because I do not think my students would tip me very well.
No, we actually, side note to your side note, we have this tradition in our graduate program where students are supposed to clap at the end of class to applaud the exchange of knowledge. I don't ever get any applause. Now, in fairness, they're usually working on a group activity at the end of class. But yeah, I don't want to leave my salary up to tips.
No. So that just leaves what it means for a job to customarily and regularly receive tips.
Yep.
And we don't have to guess on which jobs those are because the IRS issued a list of occupations where they believe that tips are received customarily and regularly. And basically that's the list that taxpayers now have to use to figure out if they can claim this deduction.
I'm excited.
And that's what we're going to talk to our guest about today.
I love a list.
Alexander Rifat covers the White House and Treasury for Tax Notes Federal. Prior to joining Tax Analysts, Rifat worked at Euromoney, where he covered U.S. and Canadian legal markets. He holds an MS from King's College London and a BA from the American University in Cairo. Alex, thanks so much for joining us on the podcast today.
Thanks for having me. It's great to be here.
So we are talking about this quote unquote no tax on tips provision of the One Big Beautiful Bill Act, which Lisa and I have taken to calling OB3. We don't think you should call legislation beautiful.
Yeah, everyone seems to have their own acronym or their own spin on the name. So
what are you calling it?
I'm calling it the OBBBA. So
okay, all right. We'll accept that.
Yeah.
And so, as we talked about in the first part of our show, there's some requirements that have to be met. It's not like everything that you get and call a tip is eligible for this deduction. There are some pretty concrete guidelines or limitations in the statute, one of which is that to qualify, the individual has to work in a job that customarily and regularly received tips on or before December 31st, 2024. And so we needed, unsurprisingly, some guidance from IRS and Treasury as to what that means. And so you recently reported on this list of jobs that is eligible for the tip deduction. So can you talk a little bit for our listeners about why that list was important to have, and then what your impressions were of the jobs included on that list?
Yeah, so this list was pretty important to have because, as you said, to sort of say that there's a customarily tip job is one thing. To actually put that into writing, to actually identify those individuals, those professions that qualify, is another, and that's important. So the list is quite expansive. It covers a lot of different professions that perhaps maybe people don't necessarily normally think of as being tipped jobs. There's locksmiths are included, tailors, plumbers. So it's pretty expansive list, and they followed that up with proposed guidance last month that was also quite expansive in terms of both what they're interpreting a qualified tip to be, and as well as the types of payment methods that can be used to qualify. So it's not just in addition to cash. There's also credit card, debit card payments, but also even casino chips. So if you're a casino worker, which many of those professions do qualify under that list, getting a casino chip qualifies. So so it's a pretty expansive approach, and I think that the tax policy observers that I talked to, they on one hand, I think that they've said that it shows that Treasury did put some thought into the process, that they had to, that there wasn't just some sort of because I think that in terms of the political discussions of this this proposal, obviously it was one of then candidate Trump's major proposals last year to workers. I think that there's sort of a perception of sort of when you think of no tax on tips, you think of bartenders, you think of waitresses, waiters, but it's quite an expansive list, and so I think having Treasury put out sort of 68 different professions, I think is important. Was a sort of showed that the importance that they were placing this particular provision. So there's still a lot to see sort of how this all plays out in terms of the reporting requirements, and how does that change sort of behavior within these industries that are now have this ability to take this deduction. But it remains to be seen.
You've said several times how expansive the list is with 68 separate job titles. Do you think ultimately that's a good or a bad thing? I mean, we've raised some pros of this. What maybe talk about some of the cons of such an expansive list? Yeah,
so you can look at it as sort of maybe a double-edged sword in a double-edged sword in some respects, because on one hand, there is an acknowledgement through this list and for the qualified and for the eligible workers that there are a lot of workers in the country that receive tips as part of their income, and now there is an acknowledgement or an ability now to be able to deduct some of that income from their federal taxes. On the other hand, again, going back to what we were talking about in terms of the reporting requirements and the hurdles that may require, if you are in one of these qualified professions and you receive tipped income, but you receive you're not used to you don't have a reporting structure in place to that that makes it easier to sort of track your tipped income. You're going to really want Treasury and the IRS to spell it out, how exactly they should be tracking and reporting on that income.
So you've mentioned the challenge of potentially having to get a new reporting mechanism in place, particularly if, I can't imagine that locksmiths maybe have a very extensive tip reporting regimen. Maybe they do.
Yeah.
No shade to locksmiths. You've also talked about I won't say it's a particularly complex calculation, but there are some limits that people have to be aware of. Are there any other challenges that you foresee, maybe particularly for self-employed individuals?
Yeah, so it goes back to, for those self-employed individuals, it's going to be a question of, how are they going to incorporate the prospect of this new deduction into their financial reporting, business reporting, mechanisms. And for some, it might be easier. For others, it might be something where they're going to have to invest in new technologies, or they're going to have to maybe seek out legal counsel or tax counsel, whereas maybe they didn't have to before, because they're now having to this new deduction or this new provision that they could potentially use. And so I think that for those who are not used to reporting on their tips. I think it'll be interesting to see how the IRS and Treasury makes either their life harder or makes it a little more difficult.
What do you think? Do you think the benefit is going to outweigh some of these costs of additional reporting and, the complexity, increased complexity of compliance in order to claim the tip deduction? Which do you think is going to be more powerful, the cost or the benefit?
Yeah, that's a great question. I think, I think if you ask anyone that they could be eligible for a new tax deduction, I think that they will definitely be positive, have a positive, reaction to that. I think that it's just a few things to kind of keep in mind is many people who are tip workers, especially those who work in the service industry, many of them are at the lower end of the income levels, and they're already having a number of deductions and other tax provisions that make their overall tax liability quite low to begin with.
Yeah.
And so this provision, it's really geared towards certain levels of certain industries where you're not necessarily sort of making it at the lower end of the spectrum, but you're also kind of not at the higher end either. So so that's just something to keep in mind. But I think that it will come down to how complex the reporting requirements become, and then finally, how taxpayers, how small business owners that are eligible, how those in the service industry who are eligible, how does the behavior and the economic structure change, or how do they react to those reporting rules when they are finalized? Is it a situation where there's going to be more of a preference for cash tips, or is there going to be more of a there's things like that just to keep in mind in terms of how the reporting rules sort of will determine just sort of the complexity and the overall economic environment for these individuals.
Is there anything else you'd like to share about the tip deduction?
Yeah, so it's just I think it's important to also just point out that still paying some taxes on those tips. You're still paying Social Security and Medicare tax. So while the slogan "No tax on tips" is perhaps it rolls off the tongue a bit, just keep in mind that you're still paying some taxes, just not federal income.
Absolutely, very important.
Very important. Yep, and only up to 25,000, and with income limits and all these other caveats to it as well.
Thank you so much.
Yeah, but it's been a pleasure. I really appreciate it.
Thanks, Alex.
Okay, time for the good, the bad, and the ugly. And I think I'll start by saying yay for quick guidance.
Yeah, it is pretty quick, isn't it? This bill was passed in July of 2025, and we're sitting here, in the fall of 2025, we already have a list of 68 professions that qualify for potentially a reduced tax on tips.
I think it's amazing. And as Alex said in his response, it seems like a pretty thoughtful list. Like they actually put some care into curating it, and so just win-win-win.
Okay, I'm shocked and frankly a little speechless at how positive you are right now.
I'm happy. I like it.
So you're gonna have to keep talking because I'm over here collecting my jaw from the floor.
Collecting your Peruvian chickens. I'll do it. I'll keep going.
Okay.
And I'll say, and I alluded to this earlier, some people are a little grumpy about the mandatory versus voluntary reporting.
Okay.
But based on my understanding of the FICA tip credit, so this is a situation where the government is trying to incentivize accurate tip reporting. And so to do that, they give the employer a credit for their share of Social Security FICA taxes that they pay on their employees' tips. And one of the provisions there is it also has to be qualified tips, and those tips can't be mandatory. Those tips have to be voluntary. So in the name of consistency And I think ultimately, in the name of simplicity, you're either going to have to change it both places,
Right.
or you're going to have to keep it voluntary in both places. So I don't hate the fact that it has to be voluntary tips that are subject here, especially because the limit is pretty high. $25,000 is fairly high. I would imagine that not all of your tips are going to come from mandatory service fees. So I don't hate it.
I think it'll be interesting to see what places do with those mandatory service fees, right? Are they still going to impose it? I could see them still imposing it on walked checks, for example, where somebody didn't sign off and tip because you want to get that tip regardless, even if you don't get a deduction or a credit for it. But I could see the automatic charges for parties over a certain size going away, or in Austin and I think in a lot of places, there are these wellness fees now, right? Where you're contributing, 2 or 3% to the overall wellness of the staff. That's not going to qualify because it's automatic. I wonder if that's going to stick around.
I agree. And this could be ripe for a lot of interesting research ideas, because you could see maybe the suggested tip changes, right? And so it's like 20% for the quality of your service, 2% for a wellness fee, 3% for cost of living, this, that, or the other. So maybe we see companies give a little bit more guidance in terms of what they think an appropriate tip is.
Maybe. I mean, it's all gotten out of hand, but sure, they can give me guidance. And I will promptly ignore it.
A lot of things feel mandatory right now. Other good clearly is that this was intended to benefit lower income workers. But slipping into the bad, we talked about this in our first episode, and Alex also kind of alluded to it as well. If you're already in one of those lower brackets, and by the time you factor in your standard deduction and some other things, you might not be getting the full benefit of a $25,000 deduction, like someone who's in a slightly higher bracket or who's making a little bit more in tips. And so two things, we've talked about this a million times. The value of a deduction is the deduction times your tax rate. So if you're in a 10% tax bracket, this deduction is saving you less than if you're in a 15 or 20% tax bracket. And you wonder if they could have gone further and somehow made this refundable or started to give you back your FICA contribution, right? So like I mentioned, we have the FICA tip credit for the employer, but we don't have a similar FICA tip credit for the employee. So I don't want to seem greedy here, but you just wonder if there could have been a little bit more creativity in how we got this money back to the lowest of the low income individuals.
Yeah. If we really wanted no tax on tips, I don't know that a deduction was the right way to go about it. Fair point. But this is a good thing. I don't want to seem greedy, and I'll take this as a first pass, and maybe they can improve upon it, when it expires and we rush to extend it in 2028. Okay. So the ugly we've mentioned a few times already. My ugly is just stop lying to us. It's not no tax on tips. We can call things whatever we want. Doesn't make them true. It's not no tax on tips. So just stop.
No. Fair. And not no tax on cash tips. None of that statement was true. I think the ugliest thing I can think of really is that you can't deduct tips received during the commission of a felony.
Oh, okay. So, and this disrupts some plans of yours, I imagine.
I'm just looking out for the people, the pimps and the prostitutes who are out there, working for tips and not qualifying for this deduction. It just seems unfair.
I see. Hard to know where to begin with that one, B. Yeah.
I was going to say, my guess is that those people really are paying no tax on tips.
Yeah, I would guess so as well. I don't think they're reporting the income.
No.
Yeah.
Correct.
Yeah. Well, that's all we have time for today.
Be sure to join us for more tax nerdery on future episodes of Taxes for the Masses.